Welcome to The Vault Unlocked, where I take a deep dive into money topics that no one wants to talk about. This week is Legacy Week with Financial, and we're partnering with Octopus Legacy, who've teamed up with some amazing charities to gift you a will for free. Now, Holly, when we talk about wills before, what's the one thing that you say you have to have in it?
Bury me in a bra, an underwired one specifically, and I will haunt you for life. No, seriously, I will. And I have got it in writing in my own will. And I do actually have a will with Octopus Legacy.
Have a little look at this offer today. It's time limited. You've only got until the 31st of March to do it. Navigating grief is really hard. It's our duty to make it easier for the people that we ultimately leave behind. And it's like giving them a playbook to follow so that they don't have to think about all the things that are important to you, firstly financially, but also emotionally as well. Now, as part of this campaign, many people do choose to include a gift in their will to charity as a thank you for covering the cost of the will, but you don't have to claim the offer. And last autumn, Octopus Legacy actually raised over £9.9 million for charity partners through gifts left in wills.
If you click on the link in the podcast description, or you can head to financial.com and head to the protection page, and you'll find all you need to know there on how to claim your free will. So big thank you to Octopus Legacy and their charity partners for this amazing offer for our financial community.
Today we're getting into something that so many people overlook when it comes to money. And it's something that Holly and I are incredibly passionate about. We've been really passionate about this for years, and it's the concept of protection. We're talking about protection when it comes to your income and your finances and your money. It's kind of this hidden financial services product world that can be really overwhelming, that can be really intimidating, that can be positioned as really expensive, and basically a lot of unknowns because we don't necessarily have to have it. I do think we shy away from it a little bit. You know, travel insurance you just take as a given. I have to have travel insurance, and you go and get it. And then home insurance, your mortgage company's like, you need to get home insurance, and we know that it would be a big financial catastrophe if we didn't have home insurance and something happened, you know, like a flood, or God forbid, something like a house fire or something awful. We know that we would want to lean on our insurance because this is such a high value asset. You know, on here we often love to talk about growing our money, but how often are we talking about keeping it safe? And so much of what we talk about is feeling well. And that kind of like comes as a package. Some of it is confidence in budgeting, and some of it's mental well-being, and some of it is making sure there's enough to cover certain bills. And some of it's preparing for the unexpected. And sometimes you can do that using emergency fund and using cash and using strategies like that. But you can also do it with insurance. And it's something that I do and I'm super passionate about. But actually, I've improved my level of protection because even though we probably were above average in what we were doing in some respects, we were behind in others. And having closed that gap, I can't tell you, especially someone who works for herself, what that's meant. You know, life can throw unexpected curveballs. You do not need me to tell you that. It could be illness, it could be job loss, it could be worse than that. And that's where protection can come in. But what do you actually need? And I think this is the lifting the lid that we want to go into, because it's such a weird world that we just don't know a lot about. And we're not meant to know a lot about it. There's just so many questions like, do you need life insurance if you don't have kids? What happens if you're self-employed and you suddenly can't work? How do you make sure that an illness doesn't completely wipe out all the money progress that you have made? By the end of this Unlocked episode, I hope that you'll know a little bit more about protection, what kinds you need, how much you need, and why protecting yourself is one of the smartest money moves that you can make. It really is the overlooked pillar of financial well-being. When I talk protection, I'm referring to those types of insurances that really give you financial security around specific life events. And like I said, I mentioned travel insurance. In most circumstances, for a small fee, you are protected for completely unforeseen circumstances. You never want to have to use travel insurance. It's not a bonus to be able to use it. You want to pay that fee. It gives you peace of mind, but hopefully you never need to use it. There's a lot of common worries about insurances, especially things like life insurance, because it's like we're kind of tempting fate. And if we're actually confronting the concept that we may die and people may depend on us, it's like we're actually tempting fate. You know, the fact that if we're looking into life insurances, are we more likely to die earlier? And, you know, none of us can answer that, but it's a very, very normal feeling to have. And another overlooked aspect of this is the cost effectiveness of getting these things sorted the younger that you are. So I'm going to walk through the main 3 types of protection that you should be thinking about. So firstly, we're going to look at the big one. We're going to look at life insurance. There are two main types of life insurance generally across most markets. Obviously, we'll talk UK specifics, but this is very common across all markets. One is term life insurance. This provides coverage for a specific period for a term, and it typically pays out if the policyholder dies during that term. There are some other nuances, but that's kind of it in a nutshell. You can also have decreasing term life insurance. This again is for a term, but the coverage that you get typically decreases over time. So let's say you start off with like 200 grams worth of cover and it's a 20-year period, that 200 will go less and less and less. It's often aligned to a repayment mortgage. So if you think about that as the mortgage is going down, the amount that you need to pay off that mortgage goes down too. And I'm glad I've made that reference actually of mortgage, because next we're going to talk about how much do you need? Most of us that have life insurance, typically we're kind of made to get it at the point that we bought our first home. And this makes a lot of sense for two reasons. One, mortgage brokers can sell protection product, and obviously they kind of get it's a sale for them, they get a commission for that. But more importantly, it's a really good idea at this point. The banks want you to have the right protection in place. If something happens to you, that mortgage can still be paid. It's the biggest amount of money often any of us would borrow in our life. And so it makes sense that kind of that's the point at which you get it. And so many people limit the life insurance that they get to the value of their mortgage. I am not a fan of this approach. I'm a fan of having that over nothing. But in today's world, the cost of living is so high. The cost it takes to run a household is so expensive, and it's so much more than the mortgage. If you had your mortgage payment taken care of today, great. But what about all the other costs that come with running a household? It's not just the mortgage that you have to worry about. So a common guideline is around 10 times your income. So instead of picking the outstanding mortgage amount, you look at your income and you times it by 10, and that's the value of life insurance. This is a common way of thinking up a bigger figure than the mortgage that gives you this wider coverage. And it's based on a concept that if you were to get that lump sum, so if something were to happen and you got that lump sum and you invested it in the market, then you can expect, between 8 and 10% return. And so typically it should pay out the salary that the person that's passed away would have typically earned. So that's where the 10 times the income figure comes from. There is no right or wrong, and lots of protection individuals can guide you through what the right figure is for you. But I really want to make that clear about the difference between some people just cover the balance of a mortgage on a decreasing term, or they protect the mortgage for the entire term. But really that does lend itself to a bit of a gap. And so I personally, my husband personally, both have policies which are effectively 10 times our income, so that if something were to happen to one of us, the money will be put into a bank account and invested and looked after properly, and we would be able to live off the income that pot of money would pay. Let's come on to the cost of life insurance. This is a product we never want to use. No one wants to use this product. And so what we want is to pay the least amount of money for it, but for the maximum amount of protection. Life insurance is generally more affordable the younger and healthier that you are. There's obviously lots of nuances, because you could go through a health episode earlier in life and later find that if you're more healthier, the premium goes down. But generally, it's that you will never be younger than you are today. It's that point. You will never be, typically in the insurer's eyes, as young or as healthy as you can be today. And so that's why it's cheaper the younger that you get it. The cost is figured out from a combination of age, health and lifestyle, and then protection amount, the amount that you actually want to have to cover you. The average monthly cost of level term life insurance is £37.02 a month. But I found some better examples, because an average isn't always helpful. So healthy, non-smoker, 20-year term life insurance, £150,000 of cover. At 20 years old, this would be between £3.85 and £5.43. At 30 years old, this would be between £5.76 a month and £6.91. At 40 years old, we've got £11.33 to £12.18 a month. And for a 50-year-old, you're looking at £27.60 to £28.81. So as you can see, the younger you are, the cheaper it is. So now we know the details. We know what kind of covers there are, how much you think about getting, and typical costs. I'm going to use a couple of examples of how this works in practice, and it might help you to think more about whether you need it if you don't have it, or to do a review to see if you've got enough. So we're going to meet Sarah and James. Sarah's 35, James is 37. They're married and they have 2 children, ages 5 and 8. They've got a mortgage of £200,000 and they've got joint monthly expenses of £3,500, and they rely on both incomes to cover that cost. In scenario 1, if James were to die prematurely, Sarah's left with the mortgage, the childcare, and living expenses. Without James's £50,000 salary, she struggles to cover the costs. His life insurance will pay out £500,000, allowing Sarah to clear the mortgage and maintain financial stability whilst adjusting to this new life without James. So scenario 2 is Sarah passing away. Now, whilst her salary is needed to contribute expenses, Sarah does a lot more around the home. Now, by the way, just a caveat, I don't think that our example is sexist in any way against Sarah. It is very typical of the arrangements that we see happening in practice. So Sarah earns less than James, does more around the house, and does more when it comes to childcare, wraparound care, pickups, drop-offs, half terms, everything like that. If Sarah passes away, James now has to cover extra childcare costs on top of the already existing expenses because Sarah did a lot of the caring for the children. He may even need to reduce hours at work because he's now the sole carer, or he may need to kind of pay for extra childcare, more premium childcare, like a nanny arrangement outside of traditional wraparound care. This obviously increases the strain on the budget, which already has one less salary. And the right life insurance payout for him really helps him cover these extra costs that may be needed, but maintain stability for the children as best you can whilst adjusting to losing, your partner and the mother of your children. So where there's an income imbalance, it's really important to consider the life insurance on both parties, because if you only cover directly related to salary rather than like family income, the payout could be much lower, obviously, for the lower earner, but it doesn't reflect the gap. That person didn't just contribute their salary to the household, they also contributed a lot of unpaid labor around the home. And that's the gap we see so often when it comes to women. In fact, loads of times we see the woman not protected at all. And this is an issue we see a lot. We see a main breadwinner protected to the highest amount, but the lower earner not protected as much. And if anything were to happen to the lower earner, it leaves the family in a really sticky situation, not just because they've lost the lower earner's salary, but because they've lost all the other things that they did practically as well. I've seen it so many times, and honestly, with life insurance, a family can focus on grieving. It's already hard. That added financial pressure is just not the thing that you want at that point. And for a relatively low monthly payment, you can cover off that scenario and hope that it never happens and that you live far beyond the term life cover. The cover ends, you may not ever get it again if the kids are grown and you kind of feel in a good place financially. But if the worst were to happen, that small monthly payment, which in some scenarios is less than kind of Netflix or Spotify, you just get that peace of mind. This is not a deep dive into protection. This is high level. So there's lots of other things to look at when it comes to life insurance. There's lots of other things you can do. You can put it into a trust in some scenarios. You may have more complex needs when it comes to life insurance. Now, we only went into life insurance lightly. If you want to go deeper, you can go to financial.com/protection, and we've loads of guidance on there that should be able to help you. We are moving on to protection number 2, and this is critical illness protection. The purpose of this kind of protection is to provide you with a lump sum payment upon the diagnosis of specified serious illnesses. This might be a heart attack, it might be cancer, it might be a stroke. There are lots of different examples. And whether we like it or not, this is such a likely reality for many of us. According to cancer research, actually, about 1 in 2 people now born in the UK will be diagnosed with cancer at some point in their life. I remember that being 1 in 3. And with this increasing rate, especially with age, critical illness cover can provide that lump sum, that financial support that you might need if you need to go through treatment, if you need to change the way that you live, if you have to stop work. Now, I've seen scenarios where people grab life insurance kind of on the way to getting the keys to the house, and they're not really thinking through why they need it, other than it being obvious, like, you've got this big mortgage. And then that's it for protection. And people don't often go deeper. Sometimes, I'm going to be honest, the protection industry is a bit icky. I have been in scenarios myself where I feel like I've been sold to. It's very like salesy. You don't always think the person's got the best interest for you, and that might not be true, obviously. And you want people to get paid for the work that they do. But protection has always made me feel uncomfortable. It's why Holly and I have always leaned into it, especially in the early days of Financial. People might remember we've done quite a lot of campaigns on life insurance in the past, but actually we've never gone wider and and dissected all these different types of protection to make sure people are protected properly, but they're protected in a cost-effective way. I don't want people not getting protection because it doesn't fit in their budget. The types of cover that we are talking about, especially with kind of the average age of people that use our app, but also, yes, talking about typically healthy people, it's much more difficult when you have had different diagnoses. But again, it's still not impossible to get cost-effective cover. But we want cover that can give you peace of mind, that can look after these scenarios so that you're financially well, but that doesn't break the budget, that lets you kind of accept it as a direct debit and it not impact you too much. The average cost of critical illness cover in the UK is around £25 per month. It's not essential, but this product does provide that peace of mind for, I'm going to say it like when, not if, people get diagnosed with these conditions. 1 in 2 is a stat that you just can't argue with. It's this like valuable safety net, and it's something that doesn't cost as much as you may think. We're going to use an example. We've got Olivia. Olivia is 35. Coming from our millennials today. She's an accountant. She has no dependents. I'm already picturing her like in a really cool work outfit getting a tube to work. But anyway, she's financially independent. She pays £2,500 monthly for her mortgage, her bills and her essentials. So with Olivia, we have a scenario where she gets diagnosed with breast cancer and she requires 6 months of treatment. After that treatment, she'll need recovery. She can no longer work full time whilst navigating this treatment. And this has wiped out her income. Now, even though obviously we get free healthcare, luckily in the UK, she still has additional medical related costs. She has additional transport fees. She's got hospital car parking. She's got kind of like lunches on the go and feeding herself. Like you're not in your routine where you can kind of meal prep and take your stuff to hospital. When she's home, she's got higher energy bills because she's not in the office. She's trying to keep herself warm. If Olivia didn't have critical illness cover, she would have to drain the savings that she has worked so hard for. She is going to have to rely on family for financial support when she has been so independent for so many years. And really experiences quite a lot of stress during this period when what we want is for Olivia to focus on beating this cancer. Let's imagine Olivia had critical illness cover during this scenario and she receives a £50,000 payout upon diagnosis. That is game-changing for Olivia. She has been looking after herself for so many years to have that peace of mind that money is fine and all the bills are fine and she can keep her nice apartment and she kind of keep her life as normal as possible while she's navigating this challenge is so freeing. She doesn't need to rely on family. And quite frankly, Olivia might not have a family to rely on. She can focus on recovery and quite possibly go back to her life as she absolutely loved it and not be set back months or even years financially. I know so many Olivias, and in fact, they're probably paying 5 times that critical illness cover price for a bougie gym membership. And I want them to have the gym membership, but I also want them to have that cover. And again, it's the same as life insurance. I also hope Olivia never has to use it. But if she does need it, having that lump sum, that peace of mind would be game changing. And again, Olivia, we've said obviously was financially independent and she had no dependents, but it could happen to those of us with dependents or with a partner that relies on that income. So if you don't have critical illness cover or you're just not sure about what your policy does, go dig it out or go have a look on financial.com/protection and read the guidelines around critical illness cover to see if this is a gap that you need to close in your financial well-being toolkit. So the final protection we're going to talk about is income protection insurance. And if you're like me, you may have also been wary about this type of protection. I think in the past, I've definitely been oversold it. Really long terms, really expensive premiums, kind of didn't fit what I actually needed in that moment. And so I just decided not to get it. And then if you never recheck in and think, no, my life's changed and my circumstances have changed, do I need it? You just crack on. I do know a lot of self-employed individuals that are quite good with this type of protection. It might be industry specific. So you might have a specific one for hairdressers or beauticians, or you might have one for if you're in the building trade. But essentially, the purpose of income protection insurance is to replace a portion of your income if you're unable to work due to illness or serious injury. Again, the types of people who should consider this insurance are people with dependents or, a partner that depends on them for that income. Definitely self-employed people whose job is very manual. So we've talked about before, like whether it be hairdressers or laborers on a building site. Maybe people with hazardous hobbies, like this is connected to injury, remember. If you like cycling's pretty dangerous. If you're a skateboarder, that looks pretty dangerous to me as well. Those types of things where you are more likely than someone without that hobby to get an injury that could limit your ability to work and then to earn, it's worth looking at. You could go for a shorter term policy. This might provide a benefit for example, 1 to 2 years. allowing you time to recover from the illness or the injury. And I think this policy is super handy because it's cheaper to go for like that shorter 1 to 2 year option. And I think in that scenario, I would want that breathing space to kind of just get my shit together. Like, this is a stressful time. You've had an injury, you've had an illness that means you can't work, that means you can't bring in a particular type of income. It obviously interacts with the different sickness policies that you may or may not get through work. And don't forget, we change work all the time. So having this in place can give you that time, as we all know in financial, to work through some budgets, get your act together. And if then you can't later return to work, you've had that cover for 1 to 2 years and you've had time to change your expenses. You might have to lower your costs. You might have to do a lot of different things. But having that peace of mind for 1 to 2 years is what I think a lot of people would appreciate. You can, with income protection insurance, go a lot longer and have a longer term policy. Some of these policies offer benefit until retirement age, but they are quite expensive. I think that in the past, I've been quoted those type of policies and that's put me off. When in reality, the shorter term one really appeals to me and the way that we manage our money at Financial. So in terms of how much it costs, premiums can really vary depending on your occupation, your health, and the coverage amount that you want. But we did have a look, and the average cost of income protection can be as little as £10 a month, depending on a few factors. So again, I love the idea that you can kind of do a bespoke policy for you. What is the right level of budget that you can put to this that gives you that right level of peace of mind? We're going to use another example. We've got Kobe and Chloe. Kobe is 42. He's a self-employed electrician. He earns £3,500 a month. He gets no sick pay, no employer benefits. He injures his back and can't work for 6 months. Without income protection insurance, he has no income, struggles to pay bills. He's forced to take on debt to navigate this 6-month period, which is just piling on extra stress when he's meant to be focusing on his back and getting that better so he can get back to work. We've also got Chloe. She's an employed marketer. So she has £1,800 in monthly living costs. She develops severe burnout and anxiety and multiple mental health issues off the back of this and requires extended leave. Without income protection, statutory sick pay, which is £116 per week, is not enough, which is massively adding to the stress that she's meant to be trying to recover from. Now, with income protection, she took out a policy covering 50% of her income, meaning she can afford her bills whilst recovering and focus on getting back to work. Of the 3 types of protection, we've done it in the kind of the order of importance and the impact that it would genuinely have on your life to receive a payout in the circumstances. Income protection is the cheeky little one at the end, to be honest, which I'm interested in because so many people discount it because they're quoted really, really high. But as I said, look in the description or go to financial.com/protection and reread the guidance on how the scenarios about how much you might need and what it would be for, what it would cover, what peace of mind it would give you, because that one for me is really interesting when it comes to emergency fund, especially for our self-employed people, especially for our manual people. That extra cover in those scenarios could be game changing for your financial well-being. Now, it is Legacy Week, and so the Vault episode on Thursday, I share a story which is really hard to share. In fact, it was that hard to share, I had to write it and read it out because it's very, very emotional. Ironically, I am getting more emotional talking about it now than I did reading it out. I think I was like game face studio, girls there and everything. But I want you to listen to Thursdays. We discussed the concept of wills, and I'm going to lean into it a little bit here because, again, it's something that Holly and I are incredibly passionate about. We have seen firsthand the impact of having and not having a will. This is also especially important for those people who have long-term relationships and who are not married. Okay, so who needs a will? Everyone. That was easy. Do you think we should stop there? I found that really easy. Everyone should have a will. Everyone over the age of 18 should have a will. If you have a home, savings, dependents, sentimental items, or any kind of preference about what should happen if you were to pass away, you need to write it down. But more importantly, you need to write it down in a legally compliant way. We're going to go UK specifics a little bit, but if you do not have one, the law decides what happens to your assets. Loved ones in your life may not inherit what you owned. Imagine the long-term partner that you've been with for years and you might be estranged from your family and they get your assets and your partner that you'd built all that up with gets nothing. And more importantly, if you have children, you touch on issues like guardianship. If the worst were to happen to you, who would you like to look after your children? A couple of really common myths. Again, we talk about it a bit on Thursday, But I'm too young, and we've all thought that this is really common. But unfortunately, we have far too many stories to tell about people that died young. And another common myth is I don't have any assets. Even small estates, which is kind of like all your assets put together, can cause a lot of stress if there's not just a clear guide as to what the person that died wanted to happen to it. There are a couple of ways that you can sort it. You could use a solicitor who would produce a lovely, legally sound will with all the T's crossed and the I's dotted. And it could be helpful if you've kind of not got a straightforward scenario, especially if you've got, step families and maybe quite a large estate, lots of different things going on. So you could go to a solicitor, but you could just also use an online will writing service. This can be a quick and simple option, especially if you have quite simple affairs. I really wouldn't recommend DIY ever. You want it to be, as I said, legally sound. And so whether it's a solicitor or whether it's an online service that can kind of be put through checks and balances, you want this document to stand up. You then need to make sure you review this will after big life events and changes, or if there's not been many events and changes, every 3 to 4 years. Things like marriages, divorces, children, and like big asset changes can really impact how a will operates. And you might find that the one that you did doesn't kind of work in the new scenarios. I also like the idea of including wider family in that, especially if you're in a great place with your family. Like, let's have it be a really transparent process and let people know what the intentions are. It kind of normalizes it. You could throw a will party. I've heard about that being done before, but it does normalize it. It relaxes people and everyone's prepared for should the worst happen. And the idea is that you write a will and you update it every few years, and it's a long time in the future as to when anyone ever has to look at it. And the final takeaway when it comes to wills is it's not just about money. We're not talking about the wooden room in the movie where everyone's like, let's read the will. It can be like that, and I'm here for the drama. But this is about protecting your wishes. It's about protecting your loved ones at a time when they will be going through it, and removing stress and complication for what already is a really difficult time. The call to action there, get a will. Again, go to the website, have a little look. We're going to wrap up with a little bit of homework because I feel like we've given you a lot of guidelines today, things to think about. And so this is your to-do list. I want you to evaluate your current financial obligations. That's like your debts, your monthly expenses, your future money goals. Revisit that and have a look at where you are at with your money. Then secondly, look at your dependents. Who relies on you for money? And also assess your current savings, your emergency savings. How long will your emergency fund last? What kind of things can it cover? And with this information, I want you to go through each of the 3 types of cover and think, with what I have and with what I need, am I protected properly? This is especially true if you are the lower earner in the family, because I pretty much guarantee that you've probably underinsured yourself. And it's especially true if your life insurance is only linked to your mortgage. I really want you to think about that different scenario where actually you may need more than the outstanding balance on your mortgage. In fact, some people have the old life insurance and houses have been long sold since then, and everyone's moved on since then. And then lastly, get a will. I hope you're walking away from this episode with a clearer understanding of the protection that you may need and the protection that you may already have. And remember, this isn't about making you feel overwhelmed or scared or giving you extra anxiety. It's about giving you peace of mind, knowing you're prepared financially if the worst were to happen. I really urge you not to wait for the perfect time. Book in a life admin session, get a bottle of wine, get a kettle brewed, get some chocolates, get some crisps, get the paperwork out. In fact, take pictures and send it to us. Not of the paperwork, obviously, but take pictures of you doing that and send it to us. Show us that you are embracing this element of life admin. Because once you've done it, you don't have to check in on it for a few years. Take control now, because you and the people that love you and that are close to you deserve to feel secure. As ever, before I lock the vault, if there's anything that you want to share, you might have a story about something that we've talked about today. Might be difficult to share, but if you want to do that, if you think you've got something that could inspire someone else to take action, please do, along with anything else that you think you'd like us to talk about. And just a disclaimer, The Vault Unlocked is a lighthearted chat around life and money, even though today's not been that lighthearted, and it's not financial advice. Bye-bye.